Welcome back to the Daily Journal. We'll be reviewing my model from the London session in NASDAQ. Unfortunately, I wasn't able to be present at the charts. Well, in fact, I was live streaming for the community, so I was very much present with the charts. But I'd just taken a win on the retracements on YM, so my focus then shifted to providing value to the community. But this was such a beautiful A+ model. A little upset that I wasn't around to execute, not because of the money, love it, but I'm here to master the craft of trading. And so I relished the opportunity to execute an A+ model. So going into the day, right, for Friday, my bias for the week was confirmed on this Wednesday pullback. So the previous week, equal highs. This previous day, relative equal high to this previous week was the draw on liquidity going into Friday. And that was this draw on liquidity was validated from the following. The first was the fact that the new week opening gap was respected by this candle, right? We didn't have a body close beneath it. As RCT says, the wicks the damage, the bodies tell the narrative. In addition to the new week opening gap being respected, so was this daily order block. And lastly, for the daily chart, YM, its correlated pair, or one of, had swept this low. So technically speaking, NASDAQ had swept the previous day low. But since it actually hadn't, at least on its chart, this is the stronger pair to trade on this day. Going into the next day, that was slightly different. YM had some catching up to do, which is why you had a bigger expansion on that day. So trading trading London on NASDAQ, let's drop down to the 4 because there was one more confirmation that I required going into Friday to confirm that I was trading towards these highs. And that was this 4-hour fair value gap, which got inverted. This is one of my favorite high time frame models. The inversion journal is one of my favorite models. In fact, the inversion is what basically got me funded over the last year and a bit. I was typically a unicorn trader, right? Looking for that second sweep of liquidity and so on. But the inversion, that came from experience simply because just like we have it here, right? High time frame model, high time frame, low time frame, it's all the same. It's fractal. But the fact that, for many times in the past, I'd be looking for price to trade lower to sweep this low. If I was bullish, I'll look for this type of scenario. But so often I wouldn't get that sweep. This is probably before the time of SMT for me as well. I wouldn't get that sweep. We're just going to close above and the trade would move without me. My bias would be correct, but I'd be left behind. And that's when I eventually clicked that this is an inversion. You don't need that second sweep. Typically, you'll get that second sweep from, its correlated pair, which we had already got over there, right? On that previous day. So going into the day, I didn't need that sweep. I didn't require that sweep. Anyway, so that's neither here nor there. The fact that we had inverted this, right, going into this session over here, was my final confirmation that I could trade towards these highs. So I was looking to get on side and I need some form of retracements, which we got, and I traded that on YM, the weaker pair. If you haven't seen that video, go check it out. That was a retracement model, trading this retracement. But for me, my A+ model is trading market maker models, especially when you get a retracement and for continuation. I love to trade the distribution side of a market maker model, especially in a high time frame bullish scenario. Okay, so going to this trade, it was the 4 a.m. Power of 3 that I was looking to trade. So the fact that the 2 a.m. had opened, had come lower, and we had this sweep of liquidity, this 15 minutes sweep of liquidity, which is one of the requirements. Now here's the thing. I would need at the very least Asia's low to get swept. But if you look at YM had swept that low. In fact, it didn't sweep the low, it bounced at the 0.5. which I spoke about in that previous daily journal video. But basically all of Asia's liquidity had been swept. And we got that retracement. So dropping down to the 1 minute chart, let's just rewind the clock here. Okay, so let's just take it back to 4:15. Okay, so keep your focus here. This is the previous week relative high. Now, relative highs. So given the fact that we are bullish, right, we've just been trending upwards for the reasons I explained on the high time frame. That's the bias, right? So you trade towards that. Once you get confirmation, you trade towards that. And with these highs intact, we now have relative highs, highs relative to the weekly drawn liquidity, right? So this could be, call it your daily drawn liquidity, or rather the session for London. And the fact that London at 3 a.m., what's London done since the open? It's traded to the upside. It hasn't taken out any major liquidity. It's trended to the downside. And it's taken out Asia's liquidity, right, with its correlated pair. So since we now have these lows taken out on its correlated pair being YM, look at that SMT divergence. So for me, trading market maker models, first step is your high time frame price delivery array, which we got in the form of this 15-minute sweep. Right, let me just change this up because we're using the 15-minute now. Just waiting for that to load. Okay, great. So we're anticipating a swing low to form, which we confirm on this next candle closure, open, sorry. So this candle is potentially forming a swing low. So this work is confirmed once we close a candle body above that. So have you done that yet? No. So this is my line in the sand. I need to see this get closed above. Right? That will confirm the reversal. So this candle on the 15 minutes is forming a swing point, but it hasn't yet confirmed a reversal. The change in the state of delivery on the 1 minute will confirm that. But so far, we've got your SMT divergence. Okay, so there's the high time frame sweep of liquidity confirmed on this 15-minute candle. But has price reversed yet? No. So what I look for is SMT, a second SMT, right? So there's your high time frame SMT, and now we got our lower time frame SMT. Look, this is YM. YM's clearly on this move, taking out its low. So there's your second SMT. All right, so everything is lining up here. One more thing I need to confirm is liquidity and inefficiency. On the accumulation side of a market maker model, right, the curve is split into two. You get your accumulation side, you get your distribution side. And so what I'm looking for is two things, inefficiency and liquidity, because that is the two reasons why price moves. And so we clearly have inefficiencies. Look at this one-sided delivery. This is all the sell-side imbalance, buy-side inefficiency. So the market, which is always seeking to achieve efficient delivery, is looking to balance this sell-side imbalance, buy-side inefficiency, with a buy-side imbalance, sell-side inefficiency, and the two equal each other out to deliver efficient delivery. And the same could be said for up here, but in the form of liquidity. Why? Because relative highs, relative highs, relative highs. So once I get a confirmation, the change in state of delivery, you have literally everything that you could possibly get in terms of confirmation at that point. So let's wait to see. So we've just had a new candle open, and once we get a candle close above, and here's the thing, I'm happy to trade is it a candle close above? Not yet. We need a bullish close, right? So I'm very comfortable in trading the reversal here because I literally have everything on side. I don't need to trade continuation here. Okay, so going into which is going to be the start of the next candle, right? That's where your stop goes. You can trade straight to that. Now you could use this low over here, right? That can be your change in the state. Sorry, you can use that low because that's been confirmed as an order block with that close as well. But quite frankly, when you're operating on the 1 minute, you can calculate, at least this is what I do. I'll calculate my risk at that point, and I'll just give it a bit of breathing room. Right? There's no guarantees in trading. And so when you're on the 1 minute charts, give it a bit of room to breathe. So yeah, let's see how this plays out. So we're looking for expansion now, since we have had the reverse confirms. And so we're looking for the next phase of price, which we anticipate is going to be expansion because of all the reasons I've given above, before. So from this point, you're looking for expansion. Right, and you can see the best way to go about this was to wait for that new candle to form, open, sorry. And then what you can do is trade the continuation. This then becomes your protected low. And if you're looking to trade that, you would have traded it as such, right? And here's the thing. Okay, this is a bit of risk reward. It's about a 6, okay? But it's a reversal and it is somewhat, and here's the thing. With your change in state delivery being at all this buy side liquidity, it's not ideal. But the thing is, there's so much confidence behind this trade. Again, there's literally everything that you could possibly want. So trading a low time frame reversal confirmation is perfectly permissible, given the fact that you have literally everything that you could possibly want insofar as confirmation to get on side. But if you're uncomfortable with that and you do require more from the markets, right, to feel more comfortable, and there's absolutely nothing wrong with that. And here's the thing. Back in the day, I would never trade continuation because I was like, okay, well, what do I do with my stop? It was the same type of mentality with like inversions. I was like, why would I, initially with inversions, you have to accept that you have a wide stop loss. But flipping from trading inversions and breaker blocks and so on to really understanding order blocks. And the irony is that that's actually where I started. And after 3 years of trading, I've gone back to order blocks, which quite frankly are probably the most simple and probably the most effective, simply because they create protected highs and lows. And that's what you absolutely need in order to trade continuation. Otherwise, your risk reward is out. Because with this being the protected low, now something that would have been like, okay, well, I've got to put my stop loss here because I didn't have that understanding. And then look at your risk reward, it's like less than 2, which isn't worth it. Right? Now all of a sudden it's just over 4. And so the nice thing as well is that on the 15-minute chart, and if you don't have a strong bias, right, that work could terrify you. But you get the change in state delivery on the 15 minutes there. And you see how once you get that confirmation, bam, straight up. Continuation. So we can have a little look at that on the 1 minute. And there, right there, that is your market maker model. And here's the thing, with the market maker model, you want to trade the distribution side, which is expansion. See, once you get your confirmations, right? What's the point at this point here? Once we had confirmed the change in state delivery, which confirmed the reversal, and saying, okay, great, we're going to go from the retracement now to expanding again, from accumulation to distribution. From that point, once time aligns with price, because now price here is confirmed, so great, we're good to go. Time says, okay, hold up, I need to form the wick of the next candle, and then bam. Remember, guys, this is algorithmic delivery. The candles have to form. That is the whole concept of open, high, low, close. You have to form a wick, a body, and a top, a tail, and a wick is the correct terminology. But you get my point. That is what RCT means when you have to have time align with price. You have to wait for the time, and it doesn't just mean waiting for the correct time, it's also referring to the formation of candles over time. So there is your distribution side of the market maker model, at least a market maker bar model. And it's a beautiful thing to behold. And this is what I was saying. I was pretty upset I wasn't around to execute these, because these are just so satisfying to be on board. And you have everything that you could possibly require from the markets insofar as confirmation. So yeah, you'll be seeing plenty of these trade. This is the predominant model that I trade, is the market maker model, the distribution side. And the retracements video that I did before this in YM was just trading the accumulation side of a market maker bar model, or vice versa. So if you don't know, if you want to know more about market makers, and I have a really in-depth understanding of them, and I really just implore any of you to go and study market makers. There is no conspiracy around it. Market makers exist. It's a fact. There's plenty of research on it. There's a paper on from the Federal Reserve, as well as JP Morgan. And I know those are isn't exactly someone you would trust in terms of finance, right? At least if you go on the news. Not to get too controversial, my point is that you can read that research and take from it what you like, but they speak about market makers and how they make the markets more efficient, and that's all we're doing. There's no manipulation, and yes, we call this manipulation, but this is just a smart money reversal. There's no funny tactics in play here. They're just providing a service, and they're here to profit from that business model. And so once you understand the incentive, you can trade alongside them, and trading becomes a lot easier. So anybody who wants to understand more about that, I've got my model, which I break down the logic module by module, starting with algorithmic logic. It's in the Discord. It's for absolutely free. You just sign up to the link, and I do plenty live streams and executions and so on with the community. So get involved. But otherwise, I'll see you guys in the next one. Cheers.